Hello and welcome to BQ Prime. I'm Sesha and I'm joined by Sudhir Sitapati, Managing Director and CEO of Godrej Consumer Products, to decode the second quarter earnings. Thank you, Sudhir, for taking the time.
Thanks, Cesar.
All right. Godrej Consumer, we have seen, has reported a strong show with volumes up 10% in a relatively muted demand setting. Revenue rose 6.2% over the previous year. Net profit was up 20.6% to 433 crore, but it missed the consensus estimates owing to the higher tax rates. Now, operating profit jumped 30%, while margins also expanded 320 basis points to 19.5%. This was also despite a 29% rise in the advertising spends. I would like to know from you, where is the revenue growth headed from here on?
No, I mean, look, in the quarter, we had revenue growths that were pretty good outside India. In particular, in Indonesia, we had a very good quarter. In India, some segments performed well, some segments were a bit lower than our expectations. But overall, I think a steady volume growth of somewhere between mid and high single digits is what we are hoping to achieve quarter after quarter.
All right. So from a demand perspective, like you said, certain categories didn't perform well, and we do continue to see the premium offerings doing well, while the mass offerings continue to stay under pressure. Do you see, like as we speak, in the ongoing quarter, do you see some green shoots and recovery happening? Because this is also the festive month, so in that sense, I would like to know.
Well, certainly in Q2, we didn't see any green shoots, possibly because the festive season was pushed by a month, and there was an Adhik Maas of Shravan in Q2, which is a low consumption month, is an extra month.
Mhm.
Yeah, I mean, with Q3, with festive season coming in Q3, things should improve. But overall, structurally, there seems to be the K-shaped recovery that everybody is talking about is something that we are also seeing in FMCG, where premium categories, higher income consumers are doing well, and
Mhm.
mass category, rural, there are some ups and downs, but that's the broad story hasn't changed there.
Okay. And in terms of the margins, do you think that 19.5% is a sustainable range?
I think in the short term, the company will do better than that because there are pockets where margins have to improve further. Indonesia, Africa. We recently acquired Raymond's consumer care business, and
Yeah.
we expect the margins to expand in that part of the portfolio. So
Mhm.
while our core margin of our core Indian business may be more of the same, some
Mhm.
of these parts of the business should see quite sharp margin expansions going forward.
All right. So coming to the Raymond portfolio, I think it contributed 7% to India sales contribution during the quarter. It also turned EBITDA positive. So what are your targets for FY24 coming from the Raymond portfolio, and what initiatives are you taking in terms of expansion?
I think, in the Raymond's portfolio, we should roughly try and achieve in FY24 what Raymond's did in FY23. It doesn't sound ambitious, but the primary reason for that is the amount of stock that we sit on in GCPL and our distributors 10 days, and Raymond sat on 75 days. So there's 65 days, almost 2 months of stock reduction. So despite reduction of stock by 2 months, if we can roughly hold the revenue run rate of Raymond's, then I think it's a pretty big achievement.
Okay. And as far as the India business is concerned, we have seen the company taking disruptive innovations, some kind of access packs also being launched. So, apart from this, could you highlight a few other factors that will drive the India business going forward?
I think the India business will definitely be driven forward by a couple of things. One is access, two is new categories. I think both deodorants and sexual wellness are
Hmm.
good categories.
Hmm.
Three is some of our premium categories like air care and hair color, though hair color had a slightly soft quarter in Q2, are
Hmm.
fundamentally doing well. And we feel that there's a turnaround in our household insecticide business,
Hmm.
which is happening and should continue to improve with time.
Okay. And coming to the international portfolio, we have seen Indonesia reporting another set of good quarter this in Q2. So, do you expect this momentum to continue going forward?
I think the Indonesia performance is led by two factors. One is, of course, the base was a bit soft. So, in that sense, it's a good performance on her. But
Mhm.
also, we are seeing that our household insecticide business in Indonesia has seen
Mhm.
some structural improvement, and we
Mhm.
hope that that continues with time.
Okay, and what happens to the shift in the royalty model in select markets in East Africa? So, would this revenue consideration will also impact, I mean, will result in the performance going ahead?
Well, definitely, when you move from a flag model, as we call it, to a royalty model, you
Mhm.
don't account for the revenues. So the revenues to that extent will reduce, but the you will account for it in profit through royalty. And right now, that business net doesn't make any money. We anticipate it making 50 odd crores of money.
All right. So, my last question to you, Sudhir, is what are your expectations for FY24 in terms of profitability? If you can just give me a sense of it, overall business.
No, I mean, look, we expect steady margin improvement. Of course, on H2 of this year, we're sitting on relatively higher bases of profit. So you won't have the kind of EBITDA improvement that we saw in first half in rupees crores or percentage. But we expect a steady improvement on EBITDA percentage. So if you calculate that and some kind of steady volume growth, you'll see a reasonably good EBITDA profit expansion in second half also we expect.
Okay, I did mention that was my last question, but I have another question in mind. When it comes to the local competition, we've seen several companies highlighting local competition. Starting from HUL to Nestle and Dabur, etc. So, how do you view the competition? Do you see that there is a heightened competition coming from regional players, and how do you actually kind of what are the measures that you're taking to mitigate this pressure?
Our own position on local competition, we are very happy with our market share growth, in particular in India. So even though the volume growth on organic business was a little lower than expectation, our market share growth was good. So neither do we have quantitative evidence of local competition in our categories, nor are we getting too much qualitative evidence from the field either. So that is not a primary area of, I think, a lot of the work that we have done in bringing access to some of our packs and dropping prices have probably meant that we don't see too much issue right now with local competition.
All right. So, under your leadership, we have seen Godrej Consumer slightly now making a turnaround. So, we hope to see that in the upcoming quarters as well. Thank you so much for your time. It was pleasure talking to you.
Thank you very much.